What if the government has been quietly holding on to thousands of pounds that belong to you, and the only reason you haven't received it is because no one told you to ask? That is not a theory. That is exactly what has happened to hundreds of thousands of pensioners across the United Kingdom, and the number sitting in DWP files waiting to be claimed averages £11,725 per person. For some, it is double that. For others, it has been over £30,000 paid in a single check. Before we go any further, if this kind of information matters to you, hit that like button right now and subscribe so you never miss a video like this. And if you have a parent, an aunt, a neighbor, or anyone elderly in your life, share this with them today. What we're about to cover could genuinely change someone's financial situation for the rest of their life. So let's get into it. The DWP, the Department for Work and Pensions, is responsible for calculating and paying out the state pension to every retired person in this country. Most pensioners assume that what they receive each week is correct. Why wouldn't they? The government calculated it. The government sends it. It arrives in the bank account like clockwork. There is no reason to question it, except there is, and the government itself has now confirmed it. Over the past few years, a correction exercise has been quietly running inside the DWP. It was set up because internal reviews revealed something deeply uncomfortable. Tens of thousands of pensioners, many of them women, many of them elderly, many of them in their final years of life, had been receiving the wrong pension figure for years, sometimes for decades. The system that was supposed to calculate their entitlement had failed them, and in the majority of cases, nobody ever said a word. The total amount paid back so far is well over £800 million. That is not an estimate, that is the published figure from the DWP itself. The correction exercise is still ongoing and is not expected to conclude until March 2027. Independent pension experts have described even that deadline as optimistic. Now, here is the part you really need to understand. The DWP is trying to find the people it owes money to, but it is using the same internal systems to find them that failed to pay them correctly in the first place, which means a significant number of affected pensioners are still waiting, still receiving the wrong amount, still completely unaware that anything is wrong. The people who have been paid back so far are largely the ones who picked up the phone and asked. That is the uncomfortable truth at the heart of this entire story. The system will not always find you, but you can find it. To understand who is affected and why, you need to understand how the state pension is actually calculated, because it is nothing like what most people imagine. Your state pension is not a flat payment sent out equally to every retired person in the country. It is calculated individually based on your personal national insurance record. That record is held inside HMRC and tracks every year of your working life. Every year you paid national insurance contributions, every year you were credited for caring responsibilities, and every year that was recorded correctly, or, as it turns out in many cases, not recorded correctly at all. When you reach state pension age, the DWP takes that record, runs a calculation, and produces your weekly payment figure. If even 1 year of that record is missing, or was entered under the wrong name, or was simply never linked to your national insurance number, your weekly pension comes out lower than it should. Multiply that lower figure by every week and every year you have been retired, and you begin to understand how the underpayments have grown into the sums we are talking about today. There are 4 distinct categories of error that the DWP has formally identified and acknowledged. Each one affects a different group of people. Each one has its own average back payment, and each one has a specific way of being checked and corrected. We are going to go through all 4 clearly so that by the end of this video you will know exactly which category applies to you or to someone you love. The first category involves married women whose husbands reached state pension age before 2008. Under the old state pension rules, the ones that applied to anyone who retired before April 2016, a married woman who had only a small pension in her own right was entitled to claim an uplift. Specifically, she could receive up to 60% of the basic state pension based on her husband's national insurance record. This rule existed because millions of women from that generation had spent years out of paid work to raise children. Their own contribution records were limited. The system was designed to top them up using their husband's record instead. Before 2008, a woman had to actively apply for that uplift. From 2008 onwards, the rules changed. The uplift was supposed to be applied automatically the moment a husband reached state pension age. The DWP systems were meant to detect this, trigger the reassessment, and adjust the wife's pension accordingly. They didn't. Not for tens of thousands of women. Wives whose husbands retired and began drawing their state pension never had their own pension reviewed. They continued receiving the lower figure, sometimes for 10 years, sometimes for 15, with no letter, no phone call, and no explanation. The DWP has now identified 47,000 married women who were underpaid in exactly this way. The total paid back to this group is £252 million. The average back payment per woman is £5,553. If you are a married woman and your husband reached state pension age before 2008, this is the first category to check. The DWP has contacted the majority of people in this position, but a meaningful number have still not been reached. Outdated addresses, name changes after marriage, small administrative discrepancies, any of these can mean a file gets missed. Do not wait for a letter that may never arrive. The second category carries the highest average payout of all four. It affects widowed pensioners whose state pension was never properly reassessed after the death of their husband or wife. When a married pensioner passes away, the surviving partner is in most circumstances entitled to inherit some or all of their late spouse's state pension entitlement. Exactly how much depends on when each person reached pension age, what type of state pension they were drawing, and how their individual national insurance records compare. For widows under the old pre-2016 system, the inherited entitlement can be very significant, particularly if the husband had a strong contribution record and the widow's own record was reduced by years spent at home raising a family. The automatic reassessment was supposed to happen when the death was registered. The DWP was meant to update its records, recalculate the widow's entitlement, and begin paying the correct amount from the very next payment. In tens of thousands of cases, that reassessment never took place. The widow continued to receive her own original pension, unchanged, unchecked, and quietly incorrect, sometimes for many years. The DWP has now identified more than 50,000 widowed cases. The total paid back to this group is £483 million. The average back payment per person is £11,725. One real case that has been publicly documented involved a man named Robert who read an article about pension underpayments and decided to check on his wife's situation. After she made a single call to the relevant office, she received a check for over £22,000 plus interest. Her monthly state pension was more than doubled, from £135 to £326 from the month the correction was applied. She had been receiving the wrong amount since her first husband had passed away years earlier. Nobody at the DWP had flagged anything. The only reason the error came to light was that Robert happened to read the right article on the right day. That is the reality of how this money is being recovered. Not through the system correcting itself, through individuals deciding to check. If you are a widow or a widower, or if you know one, and if there is any uncertainty about whether the state pension was reassessed after a spouse's death, this is the category to investigate first. The average back payment alone is enough to transform a retirement. The amounts are documented, the entitlement is confirmed, and the DWP cannot refuse a valid claim once the underpayment is properly established. It is also worth knowing that if your husband passed away before you reach state pension age, the inherited entitlement rules still apply. The calculation becomes more complex in that situation, but the potential back payment is just as real. When you call the state pension service, explain your full circumstances, and the operator will guide you through the relevant questions. Now pause here for a moment. If you are watching this and thinking, this sounds like it could apply to my mom or my gran or my neighbor down the road, do something right now. Write down the categories we have just covered. Screenshot this video. Share it before you forget. Because the people most likely to be owed money are often the least likely to be watching videos like this one. They need someone in their life to bring it to them. That someone could be you. Share this now, and you might hand someone you care about thousands of pounds they never expected. Let's move to the third category. This one applies to pensioners who are over the age of 80 and whose state pension was not automatically increased when they hit that milestone. The rule is actually very simple. Anyone in the UK who is over 80 and who has lived in the country for at least 10 of the last 20 years is entitled to what is called the Category D pension rate. This is a baseline uplift that applies regardless of how strong or weak a person's national insurance record is. It exists to protect very elderly people from falling into extreme poverty in the final stage of their lives, including those who never built up a substantial pension through employment. The system was supposed to trigger this uplift automatically on each pensioner's 80th birthday. In thousands of cases, it did not. The pensioners stayed on the lower pre-80 rate, with no notification and no explanation. Months became years. Years became a growing underpayment sitting in a DWP file. The DWP has now identified more than 33,000 cases in this category. The total paid back is £68 million. The average back payment is £2,203 per person. That figure is lower than the other categories, but there is an important detail worth knowing. Many over 80 pensioners are affected by this category at the same time as one of the others we have already discussed. A widow who is also over 80 may have been underpaid on both counts simultaneously. When that happens, the back payments compound. The total owed to that individual can be several times higher than any single category figure suggests. If you have an elderly parent or grandparent over the age of 80 and you are not certain whether their pension was uplifted at 80, it costs nothing to check, and it is worth your time to do so. The fourth category is the largest, the most recently identified, and the one that produces some of the most significant individual payouts of all. It is also the one that the DWP itself has described as the most underclaimed. It is called the Home Responsibilities Protection Error, and it affects women who took time out of paid work to raise children or to care for a sick or disabled family member at any point between 1978 and 2010. The Home Responsibilities Protection Scheme was created specifically to make sure that women who stepped away from employment to raise families would not be penalized when it came to calculating their state pension. The scheme was designed to reduce the number of qualifying national insurance years a woman needed in order to receive a full basic pension, protecting her entitlement for the years she was at home rather than in paid work. In practice, the credits were meant to be added to a woman's national insurance record automatically if she was claiming child benefit for a child under the age of 16. The problem was technical, mundane, and devastating in its consequences. When women first claimed child benefit in those years, the form they completed did not ask for their national insurance number. Before May 2000 in particular, this was extremely common. Without the national insurance number on the form, the system had no way to link the Home Responsibilities Protection credit to the correct record. When these women eventually reached state pension age, the credits simply were not there. Their pension was calculated as if those years of caring had never happened. HMRC and the DWP have now jointly confirmed that this is the second largest source of state pension underpayment in the country. The estimated total amount underpaid falls somewhere between £300 million and £1.50 billion. At least 100,000 women are believed to be affected. The average back payment is around £5,000, but for women who lost 10, 15, or even 20 years of correct credits, women like the case discussed earlier in this video, who received a check for over £31,000, the individual payout can be far higher. The application for this category is made directly to HMRC rather than the DWP, using a form called CF 411, which is available to download from gov.uk or can be requested by phone from the HMRC National Insurance Helpline. If you or any woman in your family took time out of paid employment to raise children at any point between 1978 and 2010, this category alone is worth checking. It is the one most likely to have gone unnoticed, and it is the one where the gap between what was owed and what was paid has had the most time to grow. Before we get to the practical steps, there is one more thing that must be said clearly. It is the part of this story that cost families thousands of pounds every single year, not because the money is gone, but because they do not know they can still claim it. If a relative of yours has passed away and you believe they may have been underpaid their state pension during their lifetime, the heirs of that person can still make a claim on their behalf. The underpayment does not disappear when the pensioner dies. It becomes part of their estate. It can be paid out to whoever inherits that estate, provided the claim is properly made and supported by the right documentation. This matters enormously. Many of the women most affected by these errors are in their late 70s, 80s, and 90s. A number of them passed away before the DWP correction exercise even began in 2021. The pension they were underpaid throughout their final years was money they should have had for their care, for their independence, for the small things that make life comfortable and dignified. They never received it, but their families still can. A case that has been publicly documented involved a woman whose mother had died and who submitted a claim on her behalf. The payment that arrived was for £41,000, representing 20 years of incorrectly calculated state pension paid as a lump sum to the estate. To make an inherited claim, you will need the deceased person's death certificate, their national insurance number if it can be found on old paperwork, the grant of probate or letters of administration confirming your authority to deal with the estate, and any old state pension correspondence the person kept. Many older pensioners kept every official letter they ever received, often in a single drawer or folder. Those documents are usually enough to start the process. If paperwork has been lost, the DWP and HMRC can often reconstruct the national insurance record from their own internal systems. If you have lost a parent, a grandmother, an aunt, or any older female relative in recent years, and you have any reason to believe she may have fallen into one of these 4 categories, look into it. The process is the same as for a living claimant. The deadlines exist, but are generous, and the money, if it is owed, is still there waiting. Now let's talk about what to actually do. The first step is to check the national insurance record online. Go to gov.uk and sign into the personal tax account using your government gateway login. Look at the year-by-year breakdown of your national insurance contributions. The record will show you which years are confirmed as full qualifying years, which years have credits applied, and which years are showing as gaps. Any gap you cannot account for from your own memory of your working life is the first signal that something may need investigating. The second step is to request a state pension forecast through the same online service. The forecast will show you exactly how much pension you are projected to receive at retirement based on your current record. If you have already reached state pension age, it will show your current weekly amount and the calculation behind it. Look at both carefully. The third step is the phone call. If your national insurance record shows gaps you cannot explain, or if anything in this video suggests you may fall into one of the 4 categories, call the DWP State Pension Service. The number is 0800-731-0469. This is the dedicated line for underpayment queries. Tell them plainly that you believe you may have been underpaid, that you would like a review of your national insurance record and your state pension entitlement, and which category or categories you think may apply to your situation. Before you call, have your national insurance number and date of birth ready. Have a pen and paper beside you to write down any reference number they give you for the review. The call will typically take between 20 and 30 minutes. Mid-morning on a weekday is generally the quietest time to get through. The operator will ask about your work history, your marital status, the dates your spouse retired or passed away if that is relevant, and any periods you spent at home caring for children or a disabled family member. Answer each question fully and honestly. There are no trick questions. This call exists for your benefit. For home responsibilities protection cases specifically, the claim is made to HMRC rather than the DWP using Form CF 411. You can download it from gov.uk or request it by phone from the HMRC National Insurance Helpline on 0300 200 3500. If you find any part of the process difficult to navigate, or if you are helping an elderly relative who finds official correspondence hard to follow, the Citizens Advice Service offers free face-to-face support at branches across the country. Their staff handle state pension claims regularly, and there is no charge for their help. Here is the final thing that needs to be said, and it is the most important. The DWP knows about all 4 of these error categories. The figures have been published by the department itself. The correction exercise is real, it is funded, and hundreds of millions of pounds have already been paid back. But the exercise is not complete. The official end date is March 2027. In the meantime, more weeks of underpayment are building up against pensioners who still have not been found. The reason so many people are still waiting is not that the money is unavailable. It is that the DWP is using its own internal systems to identify the affected cases, and those are the same systems that caused the underpayments in the first place. The fastest, most reliable way to receive what you are owed is not to wait for a letter. It is to pick up the phone yourself, give them your details, and ask them directly to check your record against these 4 error categories. The people who have been paid back tens of thousands of pounds did not receive those checks because the government proactively sought them out. In most cases, they made a single phone call because someone they trusted told them to. A television program, a helpful article, a family member who had seen something online. Today, that person is you. You now know the 4 categories. You know the average amounts. You know who is eligible to claim, including on behalf of someone who has already passed away. And you know the exact number to call. Do not sit on this. Check your own record. Check it for your mother, your aunt, your grandmother. If the pension has been wrong, the money is there. It has your name on it. And all it takes to start the process is one phone call.